generational wealth. In this video, we will go over Forex Factory, market maker, liquidity provider, the spread manipulation, and stop hunts. So let's begin. So first, um, let's go over Forex Factory, the news. So here we have Forex Factory. You just type it in exactly up here, forexfactory.com, and it'll bring you here. So the news can manipulate the market to a certain extent, especially for, I would say, for new traders, because until you understand market structure, the news will pretty much fake you out. So you have to be aware. Sometimes learning. I guess when I started, I learned how to start learning to trade the news. For example, NFP Friday, our non-farm payroll. It comes out every first Friday of the month, which is going to be very volatility movements that's going to happen in the foreign exchange market on certain pairs, on mainly USD pairs. So we're going to get a lot of movement then. So a lot of people like to trade and get prepared for that Friday or when new big news events come out, so they know the market will move in very large amount of pips. So once you get here to Forex Factory, excuse me, at the top here is calendar, which I already got my calendar pretty much labeled for the folders here you see for the high and the impact, and then the colors coded to take that tells the impact. So you got the yellow for low impact news expected, medium to orange for medium news expected, and then the reds for high impact news expected. So as you see, it tell you the time frame, the pair, the date each news event is going to happen. Like I said, the orange and the red ones is the only ones I got on my end at the moment right now. That's going to show you the medium high news impact. Really, the red ones, which really ones I really care about seeing, which you'll see high impact news, which will move the market in a certain amount of pips. So being familiar with the Forex Factory, the news, is good for a lot of new traders. So market maker, liquidity provider. Let's go over that quickly. So what the market maker liquidity provider is, so think about it. Someone controls this market, right? Someone controls everything. There's an elite out there. We know that controls pretty much everything in the world. That small percentage of that population that controls everything. So this market maker, the one that controls this market, let's go to, I actually get it pulled up right here already on Wikipedia. I'll read it really quickly. A market maker or a liquidity provider is a company or individual that quotes both a buy and a sell price in a financial instrument or commodity held in inventory, hoping to make a profit on the bid offer spread or turn. So the U.S. Securities Exchange Commission defines a market maker as a firm that stands ready to buy and sell stock on a regular and continuous basis at a public quoted price. As we see down here, let's see. Designated primary market maker, specialized market maker approved by an exchange to guarantee that he or she will take the position of particular assigned security. Let's see what it says here in the currency exchange. Most foreign exchange trading firms are market makers, and so are many banks. The market maker both sells to and also buys from his clients and is compensated by means of price differentials for the service of providing liquidity, reducing transactions costs, and facility trade. So you see that right there. The liquidity provider or the market maker is buying and selling both to his client In order to do that, they got to be coming with a lot of money, and they is getting compensated by means of price differentials of service of providing liquidity. So they're providing liquidity. In business, economics, or investments, market liquidity is a market features whereby an individual or firm can quickly purchase or sell an asset without causing a drastic change in asset price. Liquidity is about how big the trade-off is between the speed of the sale and the price it can be sold for. So that's just letting you know how their service is providing liquidity to the market. That's what the market maker, liquidity provider is. So that's good because you want to know how to trade like the market maker. You don't want to trade like the retail, like the rest, like the masses, because the masses is continuously getting it wrong, and the market maker is the one that's creating this market. So who you want to go with? And think about it. To be more in depth, the market maker is also providing the liquidity. If you think, where is he providing that liquidity? He's providing that liquidity at the highs and lows of the days, at areas at the highs where people are going to continue to think the market's going to keep going up, and then he spike it up like he did here, and then reverse. So that's what the market maker or the liquidity provider is doing. So now let's go to spread manipulation. Spread manipulation, which usually results in your broker, which is going to happen at times, as you noticed probably before, during high impact news events or such. The spread actually gets higher. The spread goes up. Because the market maker know, of course, there's going to be a reversal in that area soon. So it has to gain as much liquidity from each of the traders and then reverse the market in a whole different direction. Of course, hitting everybody's stop loss in the process. So go more in depth on the spread manipulation. For example, let's see. So if you look at this day here, we have the high created right here. We have our first high of the day created here. And then right here, what we have is the spread manipulation, which we call here a stop hunt. So I'll show you exactly what that is too. Let's go over again. So to go more in detail, what will happen in this scenario is traders will get in, see this high of the day, first high of the day here, see market comes down, get ready comes back up here, so they know they're going to get ready for a sell again, of course, right? So in the process of getting ready for that sell again, they're going to place their sells, their limit here, sell limit here, or they sells, or had a sell stops ready, and they're going to place, let's turn this on green for our entry, because where we're going to get in. Then this will be they'll probably do like a 10 pip stop loss or so. Let's say that's 10 pips or so right there. They do a 10 pip stop loss. Actually, let's measure it. Let's see. Yeah, that's 10 pips. That's okay. Cool. So they'll get in here. See it come back up. Think they're gonna get in again right here. And what happens? This wick right here, which is the spread manipulation from the broker and your stop hunt. So what happens there is it comes and it hits everybody's stop loss and took them out the trade. And then what did it do? Reverse. for a total of 100 pips. 100 pips. Crazy, right? So that's the spread manipulation and how the stop hunt works. So go again. We have another stop hunt here. We have the high. We have the high. The first of our information. We have our high, and then stop hunt to have everybody thinking that it was going to keep going. You know, to hit their stop losses. To whoever stop loss that thought it was going to sell again here, thought the market's going to come back here and drop, so they put their stop loss up here, and then comes up and hits your stop loss and take you out the trade. Then the market reverse. Now that's all has to do with the market maker, the spread manipulation from the broker, and the stop hunts. So, like I stated before, if we look at this first example over here, where our entry would have been here, and they put the stop loss here. Even though you would expect to get in right here, your stop loss because of this wick, well, that's 10. That's a 11 pip wick, including the spread manipulation, depending on how time, because we know it's going to reverse. Spread manipulation can be from 10, 15, 20 pips, 30 pips, you know. So, you know, that would easily, you have to easily add that spread manipulation on there, which, because like I told you before, is going to come at the highs and lows of the day when there's going to be a reversal. The spread will tend to increase. So we have the Forex Factory, our news, which is our fundamental analysis, the market maker, liquidity provider, spread manipulation, and then our stop hunts. So we have more videos coming forward that'll go more in detail on all these.